Good morning, fifth year accountant. So we've really, from looking at what I've been getting back, we've really grasped the idea of question five in our exam, interpretation of accounts. Everyone is doing really, really well at that now. So I'm going to move on to question nine in our exam. So next year when you open up your paper, it will be the last question, okay? So in question nine at both higher level and ordinary level, it's either a cash budget or the next thing we're going to learn after this chapter is a production budget. So a cash budget or production budget is the last question in your exam papers in June next year. So it's the last one kind of we know that we can work on. So just introducing this, okay? So I have the PowerPoint on the left and I have the question on the right. Okay, so just looking at the question, okay, you can see that we have assets and liabilities for January. Okay, we have, I'll just zoom in a little bit there on this maybe so you can see more. Yeah, so we have our, let me see, we have our assets and our liabilities for January, okay? And then we have our sales and purchases from January till May, okay? And then we have a little bit of information here. And then we're asked to prepare a cash budget showing the monthly figures like receipts and payments. Okay, receipts is money in, payments is money out. So we have to do a 5 month cash budget, um, looking at the money in and the money out. Okay, now where this gets a little bit more difficult is when we read the additional information, okay? So if we read the additional information here, it says all sales are on credit and are paid 1 month after. So what that means is when we're making a cash budget for our business, when we sell something, okay, we give people a month to pay, okay? So for example, if we look at 100,000 in January, okay, sales. If we look at February and March, okay, these are all in a month after they were supposed to be paid. So if we look at 70,000 euro in sales in February, that was the sales for January because we sold them in January, but we gave them a month to after to pay. Okay, same if we look at March, those sales in March were sales from February. We've earned 90,000 worth of sales in February, but we gave them a month to pay after sales, so they didn't have to pay for March. So every month that you look at in sales, we have is a month. The figure is the month for the month beforehand, if that makes sense. Okay, then all purchases are on credit, except or so all purchases are the same, they're on credit. So the same thing applies for 1 month after purchase. So our purchases in January are 78,000, but they were from our purchases in December because we got a month to pay them. Our purchases figure for February is 56,000, but that was from the purchases we made in January because again we've had a month to pay them. And again then March, our purchases are 80,000 in March. Okay, that's what we paid for purchases in March. But however, we made those purchases in February. We just didn't have to pay them till March because we were given a month after purchases. So each month is figure is for the month before. Remember, so each month's figure here is for sales or purchases from the month before because we were given 30 days credit, if that makes sense. So that's kind of the most difficult part to understand this. And just wait now in the next video then I'll explain how we put these out on our cash budget then. Okay, thank you.